So we'll jump into the local market update right now. And Keith, who's not, oh, you are there. So I think you want to play that video. So usually what for those of you guys that have been here before, sometimes we go through a local market update, we do a deep dive into all the data, and we go through, it's literally 100, 120 slides in 30, 40 minutes and kind of gives us a good picture. We're going to do some of that, but we want to get a little bit of a different aspect, a little bit of a different perspective as to what's going on as well. So we reached out to Peter Politis from Greybrook. These guys are involved in so much that it gives us a complete different perspective as what's really going on kind of behind the scenes. So for today, I'm going to ask Peter to come up. So Peter, just to give everyone an idea, he's the CEO of Greybrook Realty Partners. Greybrook, if you haven't heard of them through us or anywhere else before, they're a leading private equity firm, and they have over 110 large-scale developments in Canada and the US, serving more than 10,000 institutional individual investors worldwide. I know this is very formal, but it's important to know to give some context. So under his leadership, their investment portfolio has grown to be valued at over $40 billion. So when we say we have someone here that's one of the largest capital allocators in real estate in this area, we mean it with these numbers. So that's why we feel fortunate to invite Peter out to be able to kind of go through this stuff. So let's go. Can we give Peter a round of applause, please, as he comes up? So that looks really nice, but I bet you they don't have flags at their office.
I love the opening, so I just want to say that was amazing.
There's no pirate costumes going on at their office on their social media for sure. Actually, I think something, what did we do? I don't think it was this time, but something for you and Sasha, we used a picture, and your marketing department got in touch with us, and they're like, hey, please don't use that one. Like, that's not the proper one. I think I found like the old hockey card that Sasha's on or something. So, but it's cool. Like, you guys have done so much. I mean, and you're from speaking with you and Sasha, when we get the chance to hang out, like, you're just down to earth, totally normal person, which a lot of people that kind of.
I mean, I am. I don't know about Sasha.
Yeah, I agree. We're yeah, he's not here, so
he's not here to defend himself.
Yeah, which is perfect, actually. Yeah. But it's cool because it makes a difference, right? Because a lot of people in that world, they kind of, at least in our experience, it changes things. They just can't have honest conversations anymore. So it's kind of cool. So I appreciate you coming out with this stuff. So I want to jump right into it. So just to give everyone, I saw the video, but just an idea of what Greybrook does and kind of how long you've been doing this stuff. Just can you give everyone kind of the high level overview?
Yeah, sure. So. Greybrook is a private equity firm. I'm one of the founders of Greybrook. I actually, literally this month is 20 years for me. So I know I look like I'm 25, but it's too many giggles for that joke. It hurts my heart. But no, it's 20 years today doing exactly what we've been doing today with the people that we've been doing it. And when we started, not unlike you guys, there was exactly one person, and then there were two. And now we have, I think, approaching 140 people at just head office today, right? And our vision was to find ways to invest in large-scale developments that have the highest levels of economies of scale with ourselves and with some of the largest development families in the country. And 20 years ago, it was kind of a tall order in terms of thinking, how we could get here today versus where we started. But it really started with a relationship and then another relationship and then working with a handful of what are today's some of the largest developers in Canada, multi-billion-dollar families. And we partner, we buy land in partnership with these development partners. And together with Greybrook and them, we execute these developments and we share in the profits as partners. And the reason it's worked for so long, in our view, is the structure is quite easy for people to get involved in the sense that once you make an investment, someone can't ask you for more money. You don't have to qualify for a mortgage or a $100 to $300 million construction loan. All that is done by Greybrook and our partners at the end of the day. So it becomes an easy way to buy land, choose the development you want to be involved with, because I think that's important. It's not a blind pool fund. And it's our job to create diversified investment portfolios for people because, we have condos in Yorkville, we have rental apartments in Atlanta, we have houses in Kleinburg and townhouses in Oshawa. So we create these diversified portfolios for people and allowing them to share as owners, but without having to do the work and ultimately letting your money work for you. I think it's an important concept because there's only so many hours in a day, and I think that you have to send your little soldiers out there to make a return for you.
Okay, cool. So let's jump into. I kind of want to get right at things because this is maybe the elephant in the room with a lot of things. So I want to look at the current state of things. So you're involved. I want to look at new sales and how they're impacting current projects and the upcoming pipeline of projects. And this is why I'm asking. So you can see here, this is where new condo sales are recently. And you can see that condo starts typically for all of us. I know you understand this, but for everyone looking at it, condo starts typically really follow new sales because without the sales, they're not going to make the start. So with those dropping off a cliff, it's likely that there's, new construction in condos is going to drop off a cliff, but we'll see. But under construction, the new supply of condos coming on the market is just still quite enormous in the Toronto area, especially when you compare it to look what's happened with the single family trend. And it's something we've been watching for a while is the single families, there's just almost no uptick whatsoever. Nationwide, really, it's on a downslope, but the condo number is huge. And this gets really interesting because right now, there's about 7 months of inventory in the Toronto condo market, and that's next year. That's what's coming on the market next year. It's pretty much an all-time high, and then even 2026, it's high, and then it drops up. By 2028, it drops off a cliff because no sales are happening. So, where are we at? When you guys see this as capital allocators and projects you guys are invested in, with rising inventories, what's going on here, and the number of condos being built, how are you guys looking at this?
Yeah, so there's a lot of different angles to this. This is not a one aspect, one angle. So in terms of, let's just start with the sales. The sales are quite low, right? We have a real demand for units. So the amount of units that we need every year, despite whether we sell a lot or sell a little, remains, and if it's been ever increasing with the immigration, independence, where that goes in the future. So the gap in terms of what we need versus what we have, we're still not meeting it, no matter what we sell, really. But we've seen this in the last 20 years where sometimes in a good market, you'll pull forward sales from a future year. Sometimes in a worse market, you're going to push sales into the future. But over 5-year periods, if you look at the average sales that are done, it's kind of a gently ever increasing amount because of the functional need. So whether it happens now or happens in the future, there's going to be such a gap in terms of what we have built and coming and what we need that it's going to be worth investing and buying and selling condos again. That's not going to be something that's going to go away. The challenge that the GTA is going to have is when you have periods of such slow sales like we're having right now, in 2 or 3 or 4 years when you would otherwise be delivering these units, we have a vacancy rate of sub 1% in the GTA right now with what we're delivering, which is approximately the most we've ever delivered. And you're going to see rents materially gap up in the GTA because there's no supply of markets. Our biggest concern is when you see stuff gapping up, what we want to avoid is government intervention, right? If you have no units and you know what's going on in terms of the demand, that's not changing, you're going to see a massive increase in rents. And at the end of the day, that's going to push up values, that's going to spurn people to invest in the market, and that's going to do all those things. In the interim, today it's more a function of people can't. I don't have enough money. I'm not confident enough to go and buy a condo and procure a mortgage. So you're seeing a couple things with the availability of funds, the availability of debt, but with the interest rates coming down, and on the closings and the completions, usually 95% of these things are sold, by the time you get to the end, if not more in some
Yeah.
cases. We're seeing a default rate in our portfolio of, I would say, sub 3%.
That's interesting, and that's people that have bought pre-construction are not closing when it's time to take.
Yeah. I mean, it's an unfortunate situation. In some cases, there were speculators, and in almost all cases, we're going after them,
Yeah.
from a legal standpoint. But there are some instances where you see where someone bought a place, the value of the place is in excess of what they're walking away from, and they're unable to close. So
Really? Even if the value's
some of these people you kind of want to, there's too many people to grab individually. You say, you could have assigned it, you could have done something, you had options here other than just walking away. But, we had a condo development that recently finished, and again, the default rate was sub 3%, even maybe sub 2 on that one. And somebody bought a condo at a great price, put a 20% deposit down, and we took the condo back for $590 a square foot.
Oh wow! So, yeah,
We resold it at,
Yeah.
it was like $10.50 or something like that. So, it's not always a case of I'm making money or I'm losing money. Some people who just can't or don't know the options they have, sometimes don't close.
What about the headlines that we see? Like you said something about the functional need, and you see all these headlines about, the investors have purchased 50%, investors have purchased 85% of the units, and and that's why this is going to be a big disaster because it's just all investors and there's really no homeowners there. Like, does that hold weight with what you're thinking and what you're seeing?
I mean, our condo market, the way we finance condos here, which is different than, let's say, other places around the world, is we pre-sell condos. There isn't a lot of individuals who want to say, I'm so confident that I want to live in this location, in this building, in this 650 square foot unit 4 or 5 years from now, that there's not that deep of an end buyer pool. So the way that for us to start construction, we got to pre-sell. So the pre-sales are going to come predominantly from investors. It doesn't matter now, there's certain projects might be different. We had a pretty picture of our condo project in Yorkville, which condos start at $10 million, and it's a different kind of buyer, a different kind of thing.
Less rentals at a $10 million condo.
Yeah, it's like, where you bought the penthouse for $80 million. You remember, yeah. So
my wife doesn't know.
So at the end of the day, that's how the market is fit. But I think what people don't really take into account is you don't have an asset that doesn't produce cash. It has a rental rate, it has income, so it's easier for you to both get a mortgage and also, to the extent it doesn't cover, it's also easier for you to keep it. Mm-hmm. And these people don't want to lose those assets. So do I think that investors are going to completely come out of the market and not close on buildings and scale? Haven't seen it. Haven't seen it now when the rates are the highest they've been. Forget about that they've been coming down now.
So what's interesting to me is because investors always get a bad name, and I'm like, well, the flip side of it is to your point about pre-selling the condos, if investors aren't buying these condos, well, these units aren't being built. Then we don't have, and if they're being used as rentals, then we don't have a rental supply or a rental pool. Or if some investors are walking away, these units aren't being built to go back on the market for the homeowners. So it's this double-edged sword. Everyone wants to point the finger at these investors. Oh, these investors are buying these units. They're the evil ones. And we're like, well, if no one else is buying them, then we can't build the damn units.
You know what's funny? Investors, with an S, and investor is the only difference between our market and, let's say, Manhattan. You have an individual investor, a person, a family, a pension, who owns an entire apartment building, which, in this case, we just have micro landlords. Instead of one person building a 500-unit building, you just have individual investors who wake up our rental stock. Mm-hmm. We are unique like that in the GTA. Otherwise, you have institutional investors that build these rental buildings, and you have corporate or pension fund owners, and that's the same thing. It's not like our market is not terribly different than anywhere else, other than the composition of our investor units is more individual owners versus institutional owners.
Okay, so let's take a look at this, because obviously we all know we're having crazy population growth. That's what it looks like on a chart. It's nuts. This I saw the other day from BMO. Only 7 quarters in the past 50 years have seen population growth of more than 250,000, and all 7 of those quarters have been in the past 3 years. So I think the population story, we've been talking about it for years now, but over the last recently it's everywhere. But this is what this looks like on a chart. It gets really interesting. This is by decade, the population growth in Canada. And that current one is our current decade. And you can see that the last decade, our max, before they were kind of averaging out at about 3 million, and then it kind of spiked to 4. We're at 3 million this decade so far, and it's 2024. We're not even halfway through the decade. So this is just completely outrageous. And then here's our new housing pace. Remember, there's how there's all these there's all these headlines about increasing the pace of housing. Well, this is what we're doing so far this decade, and you can see we're not even close to increasing the rate of what we were building before. And the vast majority of them are higher density units, not the single detached. The single detached number there is a tiny 150,000. We're 4 years into the decade. The decade before was 740,000. So that's 5 times what it is, and we're 4 years in. So the chances of us getting there are almost nil. And it doesn't look like a supply spike's coming at all, because we can see here, this is the application submissions coming in. You can see they've actually kind of dropped down 2023. Some laws change, so some things don't need the same applications. So there's a reason for a little bit of a drop, but not this much. And even from 2023 to 2024, with all these announcements, we're going to do this, we're going to speed up housing, all this type of stuff is, it's not really coming to fruition here. So between the population and I guess these kind of, not the supply coming on the market is, like, I guess the new sales are a problem, right? Because don't we need to spur some sales to get some supply here? Like, how are you guys, when you see, I guess it's when you see these population dynamics and this, how do you guys look at that from a development perspective?
I think from a macro perspective, it makes for a good investment area to invest in, because we are heavily involved in, I think, 65 active projects in the GTA. Maybe 70 now. We have planning applications or building permits in every municipality, some that you've even not heard of in the GTA and the Greater Golden Horseshoe and all those areas. The approval timeline for low-rise or ground-related housing is not getting any better. It may not be getting worse, but it's not getting any, and the things that they've instituted today have had little effect, really, in terms of getting things done faster. Has it made getting maybe some higher densities approved easier? Are people less insulted by more dense product today? Whether that's back-to-back townhouses or stacked townhouses or taller condos, sure. But the supply-demand imbalance, forget about where we've been in the population in the last couple of years, has been continually to be an issue. So we're not making any more land. Most of us should be aware of the green belt fiasco that went on 6 or 12 months ago, where a handful of locations out of the green belt were talked about being touched. All that has since been reversed. So there's no more land. The approval process is not happening any faster, and we're never going to catch up to the supply-demand imbalance. So as somebody who's investing in buying hard assets, whether it's land, development, condos, homes, whatever in this area, you know that you're not going to come into a situation, which happens in other markets, where you have a massive oversupply, you have massive overbuilding. We will not be overbuilding any time in our lifetimes in the Southern Ontario.
That's interesting to say, because that's a pretty big statement. But that's what you're saying. We're just not able to get there.
Without a complete stop, delete, reset of everything top to bottom, municipalities to infrastructure, which is virtually impossible, because all these different people report to different people. So a planner in a municipality, Premier Ford can say whatever he wants. It has little effect on that person, how they do their job in different municipalities and infrastructure and all this stuff. So while we can all talk about we want to make it better, and that does make it a small amount a bit better, we're never going to be able to deliver an amount of housing here for a lot of reasons that we want. And actually, I'll tell you a funny anecdotal story. In 2011, we bought a Buddhist temple at College in Spadina in downtown. The Buddhist temple sold it to us. We didn't kick them out. Our karma's still good. It's
that
all
was
fine.
Nice of them. Yeah, that was nice of you guys.
Adam Vaughn, who was...
It was on a piece of land, I guess?
Yeah. It was at College in Spadina. We were going to put a condo on there.
So you built buildings all around the temple, and you just left the temple in the middle?
Yeah, for sure. Yeah. Temple went right down. Yeah. They took their money and they left. The happiest months I've ever seen. Adam Vaughn was the counselor at that time in there, and we had a public meeting in a library on College Street, and we're presenting our application. And it's funny, so we come there, we show the building. There was 2 buildings. One was like a 40-story student housing on the other side of Spadina, and there was our 15-story building. And then someone comes up to the mic, and they're looking at it, they're like, I think you've changed it a little bit, but it's too tall, it's ugly, it's not for the area, whatever. 42 stories is too tall. And then Adam Vaughn's like, well, that's the other one, this is 15 stories, soft giggle in the crowd. And it's like, well, it's too tall, it's ugly, and whatever. So they were always against it. But in 2011, from applying to application to getting my site plan, which basically allows me to start construction, was like 10 months. Today, that process is like 3 years. From 2011, it was 9 months. 2024, it's 3 years.
Wow, it's gone that bad. I didn't realize that it's gotten that bad.
The good news is that 3 years is now stabilized, and they allow you to start certain things prior to that site plan now. But it went from 9 months to 2.5, 3 years. So they've stopped that from getting pushed out further, but no one's bringing it back. And it's not making it any cheaper in terms of development charges or other stuff.
Mm-hmm. And okay, so because I want to ask you about low rise. So because this is interesting to me. See, we're building 8 non-apartment units per 100 people versus 40. We used to build 40 non-apartment units per 100 people of population. Now we're down to 8. And there's the Toronto single-family starts, which is like, you can see that trend's pretty easy to see. And then this is around Toronto. If we look at this, the light blue that's low-rise building, and the dark blue is high-rise, and you can see if you go back to 2010 how much light blue there was. This is in York, Peel, Durham, and Halton, and Simcoe, right? So see how much light blue there was? That's low-rise. Look at 2024, right? It's just constantly going more and more high-rise. So like, don't you guys, like, do they have to put more consideration? Like, what's the reason for just going to density? Is it just cost, like land cost? Is it maximum profit? Like, are we having to put more thought now into the types of units because of the types of units that are in demand, and this maybe we're overbuilding on these small condos or something?
So a couple things. One, the ability to deliver. One of the problems with urban sprawl is the amount of infrastructure and costs it needs to support cities and people over large land areas. Roads, schools, sewers, hospitals. It costs a lot more money to go up. What is the tax base that I get off of a townhouse or a 40-foot single? So in a typical low-rise development, depending on the density, we typically go between 7 and 12 units per acre. If we have a townhouse development that's like more dense, and it's probably around 17, 18, 19, but a stacked townhouse with underground parking can put about 65 or 67 units per acre. So more tax base, more people there, less urban sprawl. It's more economical. Now, some of these areas you can't build. I can't build a condo in insert location here. Yeah. The cost to deliver it versus the margin doesn't work. So, of course, the city would want more density, and the development world would want more density as long as it's marketable, financeable, and profitable. You generally would make more money. But it's not, there's a lot of areas where that kind of density just doesn't work, and you have to do low-rise housing. And to give you an idea on low-rise, because the development community, like in the GTA, notwithstanding people are, some of them are struggling today, the ones that have money have never had more money than they have today. In the history of times, they've never been more liquid. They've never had more money.
So they're sitting on cash.
They have the most cash they've ever had as a community, and it's a race to buy land. So as land becomes available, people are willing to wait longer and longer and longer to come on board. So we bought a piece of land recently in Cambridge that's inside the urban boundary with a designation for residential development. We have to take it through a secondary plan and a draft plan and some engineering. So before I can even put a house on that property, it's probably, before I get a building permit, 7.5 years. So it's in the urban boundary. That process of getting to an actual building permit is 7.5 years. So how are you going to deliver faster supply when it takes 7.5% of a decade to deliver a house?
Is there a difference between low-rise and high-rise with that?
Yeah, I mean, depending again on the location, and there's like, make sure there's no exotic servicing issues, but yeah, you're in for 4 years for a building permit, 3 or 4 years, right?
So that's why you're saying in our lifetime, because by the time we can even if we started to really try to speed up things now, based on the way things are structured currently, we're years before we can even get shovels in the ground.
Yeah, you would need to redo the entire structure. Like, you'd have to go to like in certain places in the US, as an example, it's like pre-zoned, basically. And you know what you're going to build, and it's like, you go through a 3 or 4 or 5 month design process, but like, you know what you're going to get, you can get a shovel on the ground quickly. Now, as investors, that can be a good thing, that can be a bad thing. Getting through an approval process creates a lot of value here. It takes a long time, but it keeps asset values high, it keeps land values high, it keeps land values approval growing. So it's a great place to invest. If you're talking about, is it the best way to run a country or a province? Probably not for housing affordability.
Not if you're growing the population at the pace we're growing at.
Even if we weren't, right? It's just,
yeah.
The longer it takes to start building or selling a house, the more you have to charge for it. Cost inflation, land inflation, carry cost, equity returns. If I could get a building permit in 2 years, I can charge less and make an appropriate enough margin than if it takes me 7 years to get to something.
Got it. Okay, and yeah, I missed this one. This was the size of the units, but on where the trend of the size of the units, something I looked at. This is the GTA, and you can see the size of the units. That's the one, the kind of the one that's gone down and back up. The other one's the price for anyone looking at this. And I'm curious, it went up and down. Is that just kind of just a function of the units that were closing? I guess just some certain projects.
Probably,
because generally they've trended down over time, right?
They have, but there's a little bit of insight. So in 2005 or 6, I remember we designed a condo project that had 2 bedrooms, 2 bath, in like 800 square feet. And we thought we were the smartest people on the planet. I'm like, can you believe that we figured out a way to design 2 bedrooms and 2 bathrooms and 800 square feet? And then as you look at those designs of those previous units, the efficiency between hallways and designs and different stuff, they have gotten smaller, but the designs have also gotten more efficient and intelligent so that the proportionally decrease is not affecting as much. Yeah, condos have gotten smaller, rooms have gotten smaller.
You don't have a long hallway in the front door.
The design has gotten more efficiently better, so we have less wasted space. So it's not as bad as advertised, but it is a fact that they're getting smaller. Because price point, when we look at a condo project, price per square foot is obviously one thing, but the total dollars is another thing. Right? What's the average of a unit? Is it 700,000? Is it 1.2 million? Is it 800,000? There's less buyers that can buy a 1.2 million dollar investment condo than a $700,000.
So yeah, for price point that way too, yeah. And I'd imagine that applies to the detached market as well, just because of the land cost. And not detached, like low rise as well, because you can put smaller units on or put more units on smaller lots. It does help with the affordability and the price point as well.
Absolutely, right? And it helps with the profitability.
Yeah.
And there's more development charges and property taxes for municipalities. So there are some areas where they still respect the limited density, but for the most part, all these municipalities want to see more density. There are some municipalities, there are some low-rise communities where the municipality was so dead set on seeing a certain density across the site that developers have built out an entire community of like 500, 1,000, 2,000 homes, and there's 3 or 5 acres that are just sitting there doing nothing because there's a planned condo tower there, except it's not economically feasible to put a condo tower where those is.
Oh, so they just sit on it for a while.
And they're like, and then the mayor's like, well, the density of the overall site is, and aren't I great because I'm delivering housing, even though those things are just sitting there collecting dust today.
Oh, wow. Okay, and then what about this trend? This is from New York. This is the 0 to 4 population in New York City leaving. So you can see that's the different boroughs in New York. The numbers are going to look similar to Toronto. It's a lower percentage though, but we do have a number of people leaving. This is cities right across Canada. There's Toronto. So and the reason why you look at kids here is because if kids are leaving, they're not leaving on their own, right? They're leaving with the parents. There's Peel as well. So you're seeing people leave. That's York. So same type of thing. You're seeing people leave out of these kind of areas and into really these areas. That's Durham, Simcoe, Niagara, Waterloo, Hamilton. Does this make you guys, and what's the next one? Oh yeah, so here's the ongoing trend here with the people leaving Toronto. The blue lines are Toronto, York, and Peel. People leaving. The rest of Ontario is the yellow line. They're moving to those areas. So as you guys or the developers you're working with looking to allocate capital into land purchases, do you now have to consider more opportunities or more projects outside of the Toronto area because of these types of trends?
I mean, we always have been. Right, there's always been a relative affordability. There's always been a drive till you can afford it. There's always been move-down buyers that will sell their house for $1 in North York and buy something in Milton, and then buy something in Kitchener, and buy something in Fergus, and buy something as you go on and on and on. So to us, all these communities have a different demand. We have a development in Fergus, Ontario, that we originally purchased the land in end of 2011, early 2012, and it's like 1,500 houses. And when the population of Fergus wasn't very big when we got there, and some people are like, well, how can you sell 1,500 houses in Fergus? And our answer, even 15 years ago, was, you're not selling it to the people in Fergus, you're selling it to the people that are moving from the GTA outward. So Mississauga, Brampton, Peel, Caledon, and people were selling their houses and moving further out.
So you've been investing in this trend for a long time already.
It's not going to stop not just because Toronto's getting more expensive, but we're also not building a lot of new homes in Toronto. And when you look at Richmond Hill and Markham, a townhouse could be $1.5 million, right? You can buy a townhouse maybe in Fergus for $700,000.
Do you think that, like, my question around the units we're building, especially in Toronto, these units, because we're not giving people this opportunity of these step-up units, because we have some of these smaller condos, and then when people eventually, as they move to later stages of life, if they find a husband, wife, whatever, maybe they have kids, and then they just don't have this opportunity, so they're forced to go out. Is there any? But I guess it's just from a profitability, development charges, all this stuff. It doesn't make financial sense to then start building maybe larger 2-3 bedroom units in some of these projects.
So as a general rule, which I would say encompasses 95% of the applications in Toronto, we are obligated to do 10% of our units as 3-bedroom units. Obligated. They are the hardest units to sell. They sell for the lowest per square foot price because the total purchase price in terms of aggregate dollars is the most, right? Just based on size. So economically, they're a drag versus doing 2-bedroom or 1-bedroom or 1+10 or some version of that.
And it doesn't seem like there's a huge demand because of the cost of them anyways.
You sell them at the end because like the end users aren't going to buy them. And if you have any more, people aren't waiting 4 or 5 years for their place to live, right? So you have this issue where the entire way we finance and build condos is set up not to build end user units, and it's the least profitable, and the development charges are the highest on the 3-bedroom units.
Got it.
So they haven't figured out this math to incentivize the investment world and the developers and us to do more of it.
Oh, so it's likely this continues, and that's why you see further projects outside of that. All right. Here's prices over the last 6 months across Canada. You can see, I mean, I know some people, it's really, we're seeing it on the streets. It's really pocket by pocket, property kind of by property in areas where you can see overall prices. There's really just no panic in prices, even with higher interest rates and where they've been. This was from the recent build report that they released. They said the municipal fees rose by $42,000 on a low rise. I think it was on average, and 42,000 on a low rise and 32,000 unit on a high rise since the 2022 study. So that's just in the last couple years. And what's interesting here that a lot of people don't realize, like total municipal fees, they range from 102,000 to just over 195,000. That's across Toronto there, across Ontario. And then 55,000 to 157,000 on a high-rise development. So they went from 6% to 74%. They're just jumping. So then here's the way prices, this was from Toronto Star, and I've seen different charts like this, but here's the way prices break down for some of these projects, which I know you know all this type of stuff, but there's development charges there at 8%. Here's 14%, that's other government fees, that's hard costs there. Profits hovering around 15%, which is really like any normal business, 12 to 15%. Like you're not gonna see bigger margins even with these increasing prices. So there's a segment of people that they're like, hey, look, the only way real estate gets affordable again is prices are coming down. They have to come down hard and fast, and this the only solution. Like there's just no other way, it's not gonna work. But when I look at this, I don't think the government fees are gonna change very much. I don't think the hard costs are going down anytime soon just because of the way the economy is set up through inflation. Builders aren't going to build unless there's margin because they have to, for all their risk and work and shit like that, you got to make money. So then how is it possible and I don't mean short-term fluctuation in prices. I mean the prices come down, stay down in a significant amount. When I look at this stuff, I don't get it. I don't get that argument. It doesn't seem to make logical sense to me.
So I'm going to give you 2 examples in the U.S. in markets that we don't invest in for obvious reasons when I talk about this. But in Seattle, in Oakland, the cost to build a new rental building is not economically feasible, even though rents are high and demand is strong. And there's no building going on. So this imaginary thing where prices will just come down, I'm not worried about that chart, they'll figure itself out in a free economy, and then it'll just be cheaper. In other cities where they haven't figured it out, building has just stopped. And what does that mean for prices? Prices will go up. So in 2009, they added HST to new housing. HST didn't exist in new housing. It's a sliding scale based on what you sell a house for, or a condo. And our average townhouse back then might have been like $450,000, and HST was like 4% of that. It was like whatever it was, 20, 25 grand. Now, At $1 million for a townhouse, HST is up to 10 or 11% on the sliding scale. That's now $100,000 just on the HST alone. So no one talks about the fact that the development charges are going up, HST is a proportionate of price, and all these things are 30% of what it costs to deliver a house. So the 15%, as much as I want to make money, and there's no reason somebody would invest for 5-year and 10-year increments if they're not going to make money, the banks won't give me a loan anyways. So even if I said, I'm a philanthropist builder and I don't want to make any money, no bank is going to give me a construction loan without a margin that's at least that.
Yeah.
So the hard costs, are union rates going down? Does anyone think labor is going down?
No way.
Do we think that that's not going down? Not.
No, let's be honest, with what's happened with inflation, some of the recent bargaining that's happened in the US and in Canada, they're going up.
They're going up.
Yeah.
So input costs, you'll see some fluctuation, but it's not like 90% fluctuation in costs. There isn't really, can you get some hard cost relief? Yeah, you might be able to get 5, 10% hard cost relief. But if you get a 10% relief off 38, you get a 3.8% relief off, what's that doing? It's not doing anything.
Yeah. That's my argument. It's hard to see in this world unless there's just something that drastically changes, and I just don't kind of see.
Well, they're not going to open up more land. If land became dirt cheap, because the green belt didn't exist, I'm not advocating for that, nor do I think that's going to happen. Maybe you can make a bigger dent in it, but development charges, I have news for you. They're only going up. They're not coming. We beg for a freeze. Forget a decrease is like it's a unicorn, mythical creature, can't be caught.
With the way spending is going up, the provincial and municipal governments can't access the same source of funds like the federal government, where they just kind of go borrow more and kind of increase debt or deficits. They can't do that the same way. So when they start misspending or misallocating the funds, which it's government, so I mean, let's be honest, that's what happens everywhere, and then they have no other source of funds, so they just look at this stuff in property tax, and they're just trying to squeeze more blood from a stone, essentially.
Yeah.
Right. Here's a trend that this is a trend that's interesting. I'm curious your thoughts on this. Household net worth is up in Canada, and people talk about debt, but this is it even with debt. So we have $6.50 of assets for every $1 of debt. Okay, so that's gone up because we're having this asset inflation, right? So we're creating more money. Basically, so much of that for so many years, as you know, was pushed into these assets. And then before COVID, and when we started pumping money into people's bank accounts, that's when that inflation finally hit the grocery store. And for all the important things in life, like people were buying like Sea-Doos and 4x4s and cottages and all that type of stuff when inflation really kind of took off. But really, for years and years, it's been pumped into assets, which creates an environment that, this is a little bit skewed because of interest rates, but you can see that over time, first-time buyers have gone down. So the first-time buyer number's gone down. It's pretty much like an all-time low. So it's super low there because people can't afford these types of things. And then we see this type of trend. This is the number of people. This thing's not working, but this is the trend line there. That's where it finishes, of people that are multi-property owners. So asset owners are able to then buy more assets, and it's what Tom and I have looked at, and we've kind of called the destruction of the middle class in Canada, because if you don't own assets now, and real estate being one, or like in this example, it gets just harder and harder to afford properties. But I'm just curious, because I'm just thinking about kids and future and just kind of the structure of the economy, structure of the country. How do you look at that? Like, I'm just curious your views on that stuff.
I mean, a few things. One, I think that if you look at other more mature cities, like Toronto, is still a baby in terms of cities around the world in terms of age. Home affordability, owning a home is not something that's realistic in Munich or London unless you're super wealthy.
Yeah.
Most people rent.
So we're just going to go that trend.
I mean, it's just been a functional reality of the evolution of cities. Is there ways to stop that from happening? I'm not entirely sure any other place has quite figured it out yet. But at the end of the day, they just started. You saw the home ownerships are down. For like 15 years, they had little difference in incentives to get a first-time homeowner to come into the market. So you could pull $30,000 out from your RSP to buy your first home. 15 years ago, I think it's this year they finally increased it to $50,000 or $60,000. Well, where was pricing 15 years ago? What did $30,000 mean 15 years ago to $50,000 or $60,000 today? But they're starting to do some stuff. They want to apply that to new home construction, to incentivize the first home you buy to be a new house in order to help build new homes and deliver those. Don't go back into the supply that's already there and have more people fighting over the same supply. So do I think that the idea that everyone should have a 4-bedroom, 3-bath house and a driveway is like the standard. No, that's just not where we're going. Does that mean that it's not a good place to live? That it's not? No, it's just the reality of the evolution of big cities. And we are of all the stuff going out in the world, and it's a scary place if you read the paper. So that's just the reality. It's still one of the best places in the world. We have a lot of problems. Still one of the best places in the world to live, and that's why so many people want to come here.
Yeah, good point. Even with Trudeau in power?
I definitely avoid virtually all political discussions. Not because I don't enjoy a good debate. It's more.
Oh, there's a debate about Trudeau? Yeah. I thought it was a pretty one-sided conversation these days. But yeah.
No, I definitely do not get me wrong. I think we're in the business of I have to deal with what the realities that are in front of me. And we have events, we have fundraisers, we talk to politicians, we talk to Pierre, we give them ideas, we do all these things. There's a reality to the infrastructure and the way that politics works here. And our job is to block and tackle every day and move it forward despite whoever's in power and find ways to make it more efficient and profitable and suss out the opportunities. I was on the land and development closing panel one time, and they've never asked me back after this. And they said, what would you do to make housing more affordable and to make it better? And I'm like, well, just to be clear, in my business, that would be worse. It's better to make it complicated and less affordable and more onerous because at this point we know how to do it. And everyone's like, you're an awful person. I'm like, well, I'm just telling, I have a lot of good ideas on how to do it, but I'm not necessarily saying that that's necessarily a better investment. So at this point, to start what we started today, to get to know how to do all these things would for sure be harder than 20 years ago.
Got it.
Right? But that's why we get to make money doing it if you know how to do it. And if you can get a hold of these assets, condos, homes, you're going to have a long-term trend of making money.
Yeah. Last question, and then I know we want to cover one other thing, but the conversations that you guys are having, the developers are having kind of behind closed doors about the future of real estate in Canada, you've covered some of that just overall.
Yeah, us and our partners are willing to invest more dollars than ever in Canada, but let's just say Southern Ontario. We have a big apartment portfolio in Montreal as well, about 3,000 units in Montreal on the rental side. But it's not so easy to find assets. So finding land you want to buy, today people are like, would you buy a condo site? I would buy 100 condo sites today. There's a disconnect between the asking price today in the market and what I would pay for it, which is why it's not so easy to buy today. Similar on the low-rise land. It's just there's not a lot of it, and we would continue to invest. But there just isn't a widespread availability. We're fortunate enough that today and for a long time, we haven't been limited by how many dollars we have to invest. We've been limited to the opportunities that we think are worthy of investing our dollars into. And that's been the bigger challenge, and that's actually why you're seeing some of our development partners do things in other areas. It's a diversification of risk, but you're also seeing more opportunities in some areas. You'd want to invest more here, but the pool for what you're fighting for is small, and it's not getting any bigger. And if we could find good stuff, we'd buy an unlimited amount of it today.
Are you sticking around to the break, or are you going? You have 3 young kids at home. You're probably.
I have a 4.5-year-old, a 2.5-year-old, and a 6-month-old. I have a wedding, a baptism, and a reception today, and little kickers. So I'm looking for any reason to stick around. Is really what I'm saying.
But awesome, Peter. Thanks. We really appreciate it. You coming out, man. It's super insightful. Thank you very much, man. Thank you.